Friends, in the last video we started with the topic of input tax credit, and there we talked about which are the relevant provisions applicable, which are the rules applicable, and we also discussed all important definition for the purpose of this chapter. And if you remember, those are section 16 to 21 of the GST Act and rule number 36 to 45. Okay, so presuming that all that is known to you, now I'm starting with section 16 read with rule number 36 and 37. Okay, so section 16, this is having 4 subsections, and out of that subsection 1 and 2 are the most important ones. Subsection 3 and 4 are relevant. I'm not saying those are not important, those are relevant, but really important provisions are subsection 1 and subsection 2. Now subsection 1, this talks about who can avail credit and for what. According to subsection 1, every registered person who can avail credit, every registered person, but this is subject to terms and conditions. Now, one very common condition which you are already aware of, that a person who is registered but under the composition scheme, he will not be entitled to avail input tax credit. So every registered person and subject to prescribed terms and conditions can avail input tax credit for inward supplies. Now these inward supplies may be capital goods, those may be inputs, those may be input services. Okay, so now you can understand why did I discussed all the definitions in the beginning. What are capital goods? All the goods the value of which is capitalized in the books of account, provided those capital goods are used either in the course or furtherance of the business. Similarly, inputs, all goods other than capital goods used in the course or furtherance of the business. Input services, services which are used or intended to be used in the course or furtherance of business. So the most important thing before availing the input tax credit is to determine whether the goods or services are going to be used or being used in the course or furtherance of business or not. In case of a doubt, in the case when you are in practice, make a note why you are taking credit on something. How come it is being used in the course or furtherance of business? So in the future, by chance if the reference is needed, you have a ready-made answer for that. So credit can be availed by every registered person. If the person is not registered, the question of credit does not arise. Now this is subject to the terms and conditions, how and when the credit can be availed, that we are going to talk about in subsection 2, then section 17 and other provisions are there. So all those are terms and conditions for availing the credit, and this can be availed on all the inward supplies. Now we are talking about inward supplies. Now whether the tax is payable by the supplier or by the recipient, that does not make a difference. Credit can always be taken. So whether forward charge or reverse charge does not make a difference. Credit can always be taken. And when these are inward supplies, the reference of that is required to be given in the GST Act 2, and the amount of the tax shown therein will be credited in the account. Account means in the credit ledger. Okay, it is not a proper bank account, this is a credit ledger, so where the amount will be credited, right? In respect of capital goods, here we have subsection 3. Subsection 3 says credit can be taken for the amount of tax. Credit can be taken for amount of tax which is not capitalized. Means either you can claim depreciation or you can claim input tax credit, but this is only with reference to the amount of tax, right? Just let me elaborate. When you acquire capital goods, there is a price, and in price there is value and there is GST. As far as value is concerned, this is always capitalized for the capital goods, so this is always subject to depreciation. Here what we are talking about, this is only in relation to GST. So if the amount of GST is also capitalized, then depreciation is available, but input tax credit will not be available on that. So that applies only in relation to capital goods. As far as inputs are concerned, those are not capitalized, there is no depreciation, the amount is directly debited, and the amount of tax is available by way of credit, right? So this is only in relation to capital goods. So subsection 1 says every person who is registered, subject to prescribed terms and conditions, he can avail input tax credit for all inward supplies, and those are capital goods, input services. So before availing credit, you have to ensure that those are capital goods, input or input services within the meaning of the definition. And in the terms and conditions, now when we go to section 17, there is a concept of blocked credit also, means the credit is not available on certain goods and services. Why? That we'll discuss in section 17 only. So that's why it is subject to terms and conditions. A lot many things are there where the input tax credit will not be available. So subject to those terms and conditions, the registered person can avail credit on all inward supplies, right? And when the credit is allowed, this amount is credited in the electronic credit ledger of that particular supplier, or you can say assessee. Now coming to subsection 2, in subsection 2 we have basic terms and conditions subject to which credit can be availed. So here we have subsection 2, and these are basic terms and conditions for availing input tax credit. The first condition is possession of relevant documents. So rule number 36 is having the list of documents on the basis of which credit can be availed. So if you have relevant document, all the prescribed particulars are there, and those are furnished in the return, then the credit is available, right? So here you can say, here you can write, refer rule 36 for documents. In this video itself I am going to cover rule 36, right? So number 1 is possession of the documents. Number 2, goods have been received or services availed. So quite possible, as a recipient you have invoice, you have already made the payment, but goods are yet to come. Until goods are actually received, credit cannot be taken. Similarly, in case of services, until services are actually availed, the credit cannot be taken. Now there is a concept of deemed delivery, or you can understand that as deemed receipt. So this says when the goods are delivered on the instruction of one person to a third person, the first person is deemed to have received the supply. So here we have a supplier, here we have customer, and here we have actual recipient. So what this is said is, on the basis of customer to supplier, goods are directly delivered to the recipient, but when goods are delivered to the recipient, those are deemed to have been received by the customer. So in the case of deemed delivery also, the customer can avail input tax credit. That is concept called as deemed delivery. Number 3, the tax charged has actually been paid to government. Who is giving credit? The credit is being given by the government. When the credit will be given, provided has been paid to the government. So the supplier has supplied, he has given an invoice, payment has been made to the supplier, but he has not paid to the government. Credit cannot be availed. So the condition is, there is a document, possession of the goods, that amount of the tax has already been paid, then only this is possible. And last is, return has been furnished under section 39. So who is availing the credit? The recipient of the goods or supply, right? So whose return it is? It is the return of the recipient. That is most important, that he has furnished the return which is required to be filed under section 39, and in that he has given all the procurement that he has done, and then the amount will be credited to his account. So this is subsection 2, right? In subsection 1 we said the registered person can avail credit for all inward supplies subject to terms and conditions, and some of the conditions, so here I have given the name basic because some more things are there and everything is not there in this section, right? So this says, first of all, the person is in possession of the document on the basis of which credit is to be availed. So the list of documents is already there in rule number 36. Number 2, goods have been received and services have been availed. So as far as goods are concerned, there is a concept of deemed delivery. So when the instruction of the customer to the supplier, the goods are delivered to the third person, the customer is deemed to have received the delivery. That is called deemed delivery. So when the goods are actually received by this recipient, the customer can avail credit. Number 3, the tax charge has actually been paid to the credit of the government, and number 4 says return has been furnished under section 39. If all the conditions are fulfilled and subject to other terms and conditions, credit can be availed, right? Now subsection 3 that I already discussed, that is in relation to capital goods. If the value of the goods is capital along with the amount of tax charge thereon, then no credit. and otherwise credit will always be available. So subsection 3 is already there in your notebook. Now directly coming to subsection 4. This is time for availing credit. In this we have two different things. First time and this is recredit. Okay, so as far as first time credit is concerned, this is up to date of filing of return for September of succeeding financial year or filing of return annual return actually for the financial year, and out of the two whichever is earlier. So up to that time credit can be availed. So just understand that this is talking about the last date by which the credit can be availed in respect of the documents that we have in possession. This is up to the date of filing of return for the month of September of the succeeding financial year or filing of annual return for the financial year. So there is a difference. Here we have succeeding financial year and here we have the financial year, right? So recently ended is 17-18. So we take an example with reference to 17-18. Suppose there is some invoice dated 11th of January, say 2018. So this is for the financial year 17-18, and the return for the month of September is to be filed by 20th of September. So by 20th of September, this is first date, and the annual return is to be filed by 31st of December 18. But 31st December is the last date, but it can actually be filed earlier as well. So out of the two, whichever comes earlier, this becomes the last date. But by chance, if the annual return, if this is filed even prior to this, then that will become the last date by which the credit can be availed. So this is the time for availing the credit for the first time. Now comes the question of recredit. Now this we have to understand. For this we need to go back to subsection 2. In subsection 2 it is said that if the payment for the supplies for which the credit is to be taken has not been made within 180 days, then the amount for which the credit is given will be added with the output liability of the month in which those 180 days end. That will have to be paid along with interest, and as and when the payment is made, the credit can be taken again, right? So here it is, if payment for supplies is not made, if payment for supplies is not made within 180 days since date of document. Which document? On the basis of which credit has been taken. What is required is make reversal of credit. How the credit is to be reversed, that we are going to talk about in rule number 37, right? And then this is talking about if the payment is not made. So reversal is in proportion of the payment not made. And as and when payment is made, credit can be taken again. So the time limit of this one, what is written here, this is relevant only for taking the credit originally. If it is required to be reversed, then the payment can be taken again, or rather the credit can be taken again as and when full payment is made. So in the case of availing the credit again, time limit does not apply. So here, as and when payment is made, as and when payment is made, credit can be taken again. And for this you can write in the bracket no time limit is applicable. Okay, so this is entire section 16. We have talked about even subsections as well. So in subsection 1 we said who can avail credit and on what. Subsection 2 says what are the terms and conditions. Subsection 3 is talking about what will happen if the payment is not made within 180 days, and subsection 3 is saying either you can avail credit or you can take depreciation. Not both the things are there, right? So subject to these provisions, now we have to refer rule number 36 and 37 also to understand section 16 completely. So now we come to rule number 36. Rule 36. Now this rule 36 I can divide in two parts. Here we have documents and here we have conditions. The documents on the basis of which credit can be taken, this is invoice issued under section 31. Now this invoice may be issued by supplier in case of forward charge, or this can be issued by the recipient in case of reverse charge, but there has to be an invoice. Number 2, there is any debit note issued by supplier under section 34. Number 3, bill of entry. This is only in case of import. Number 4, document issued by input service distributor. Now this document may be an invoice or a credit note. Any of these, right? So the list of documents is given. So first is any invoice issued under section 31. Number 2, it says debit note which is issued by the supplier under section 34. Then next is bill of entry in case of import, and then list a document issued by input service distributor. The terms and conditions in relation to documents, first of all, document should contain all the prescribed particulars. The main particulars are name, address, registration number of the supplier, name, address, registration number of the recipient, date, time, description, value, rate, amount of tax. These are the main things which are required to be there in the document, right? But here we have to understand one thing, that there are certain supplies which are considered as supply for the purpose of GST even if there is no consideration involved, and that is as per Schedule 1. So for that purpose, even if there is no amount, the payment is deemed to have been made. So that is relevant for the purpose of reversal also. So if there is a supply which is falling under Schedule 1 of the Act, which is considered as supply even if it is without consideration, the amount is deemed to have been paid, and for that purpose credit can be availed. So in that case, question of 180 days will never arise, right? So we are talking about the document should contain all the prescribed particulars, right? So I can just put a note. In case of supplies, under Schedule 1, payment is deemed to have been made. Right. So the question of reversal of credit will never arise, because here we are talking about all the prescribed particulars are there. So quite possible there is no value of the supply is being made which is under Schedule 1. So for that purpose credit can be availed even if there is no payment, and there is a question of reversal will never arise. So first requirement is document should contain all the prescribed particulars, and number 2, all prescribed particulars are furnished in GSTR 2. So whatever information is given in GSTR 2, for that the credit will be allowed. If this is not given, then credit will certainly will not be there. But one thing we have to understand, that if any amount of tax has been paid in pursuance of a demand due to fraud or misrepresentation or suppression of fact, then credit of that amount cannot be taken. So here we can put a note. And it is no input tax credit for any tax paid on demand due to either fraud or suppression of facts or misrepresentation. So this is the situation where some liability of the supplier accrues because of demand, and the demand is because of fraud, misrepresentation, and this will be covered in section 74. So even if the supplier is liable, but the recipient will not be eligible to avail credit if the supplier has paid any tax because of these reasons. So this is rule number 36. So here we have list of documents, and here we have the conditions. So first condition is all the documents should have prescribed particulars, and condition number 2, all the particulars should be furnished in the return GSTR 2. Now we are moving to rule number 37. Rule number 37, that is basically in relation to reversal of credit. And the question of reversal, as we discussed in section 16 subsection 2, that is, if the payment is not made by the recipient within 180 days since the date of the document, in that situation the credit will have to be reversed. So here we have rule number 37. What it says: if recipient availing input tax credit does not make payment for the amount in invoice or other document within 180 days since the date of document, right? So 180 days and 180 days are starting from the date of document. Those are not starting from the date of receiving the goods or availing the service. This is from the date of the document on the basis of which credit is availed. Reversal of ITC is required. ITC is required in proportion of payment not made, right? So this is reversal is needed. But how the reversal is to be done? The amount of credit taken for the amount for which the payment has not been made, it will be added in the monthly liability of the month in which the period of 180 days expire, right? So assuming that 180 days are expiring on 20th of May 2018, then the credit taken earlier will have to be reversed by way of addition in the output liability for the month of May 18, right? And not only the reversal will have to be done along with interest for the period since the credit is taken till the payment is made. So this is required to be reversed, payment not made, comma, by way of addition to liability for the month in which 180 days expire. So friends, when we are talking about 180 days, make it sure that you remember 180 days only. It is not 6 months, because 6 months can be anything, 180, 181, 182, 183 days. So that's why be very specific, that is 180 days. And then interest under section 50 is also payable. That will also be payable. Since the credit is taken till the payment is made, for that interest is also payable. And for this you can keep it in mind, this is 18% per annum interest rate. And as and when payment is made, credit can be taken again, and in that situation the time limit given for availing the credit, that will not be applicable. So time limit given is under subsection 4, within how much time you can avail credit. Okay, so this is for the making the reversal, and as and when payment is made, credit can be taken again. So this also I am adding, as and when payment is made, ITC can be availed again. But when input tax credit is availed again, this will be only for the amount of tax. Any interest paid earlier at the time of reversal, for that credit will not be given. So friend, this is section 16 read with rule number 36 as well as 37. Okay, I hope you have already taken a note, and by chance if not taken, just press the pause button till the time you note, and we'll see you in the next video. Till then, have a good time.